Hello and welcome. In this video, you will learn how to use a new martingale strategy to maximize profits and minimize drawdown, and how to automate the strategy using a robot. The old martingale strategy, for example, takes new short positions with a multiplied lot size each time the price goes above a fixed distance from the old trade, as you can see in these graphics. And when the price reverses and goes down, we calculate the total profits and losses of all open trades and close them when we are in profit. As shown below, $4.5 minus $2.5 minus $1 equals $1 in profits. But this strategy needs more balance to cover the drawdown when the price goes in one direction for a long time without reverse. To avoid that inconvenience, we use a new way, or we can say the new martingale strategy. We open a new trade when we have a high probability that the price will reverse. Let's say there is an opportunity that tells 85% the price is going to reverse. At that moment, considering the probability of that reverse, we open a new trade with a calculated lot size, stop loss, and take profit. And as you can see, we close the open trades when the total is in profits. So, down 15, up 20 equals $5. Based on what we said before, the new strategy is much better than the old one. It saves the balance and makes more profits. To automate the strategy, you will need to download the EA from the link below and set the input as shown in the print screen. You can also use MT4 Tester to check the best parameters for you. Please follow these steps. This results in using the default settings. Thank you for your interest in my course. Please share and leave a comment for more systems.